This week, we saw some good and some bad in the economy. PCE, personal consumption expenditure, was the inflation report that everyone was waiting on this morning. And it did show some improvement compared to last month, but year over year, inflation was a touch higher than expected. And the Fed was more or less expecting this, and they're kind of keeping a closer eye on what the overall trend is, which is looking good. If housing costs were up to date, inflation numbers would look a whole lot better than the reports we've been seeing. Shelter is a big part of that, and it's just a lagging figure that'll take time to catch up. We're also seeing people start to spend a little less, and incomes are lower than expected. The housing market did see a small increase in home sales for August, but overall sales are still a little lower than last year. And while mortgage rates didn't really improve much this week, we are hopeful that next week's jobs data will help create, or at least help rates continue on a downtrend. Japan's new prime minister has a mindset that's likely going to strengthen their currency, which could impact our markets. But on a more positive note around the world, Saudi Arabia's considering increasing oil production, which could help lower inflation. And as inflation comes down, so do mortgage rates. And although mortgage rates did see a bit of weakening, it's really important to remember that rates aren't going to come down in a straight line. So this is likely just a blip. Next week is jobs week, so I'll see you Friday for all the news there. Oh, and if you're looking for a great touch point with past clients, I have a video on the true cost of refinancing that you can share with them as they're likely being bombarded by refinance offers. But have a great weekend and reach out if there's any way we can help. Take care.